Good afternoon, everyone, and welcome to today's Landlord Vision webinar on making tax digital for landlords. I'm Emmeline. I'm going to be your host for the next 45 minutes or so. Now, whether MTD is completely new to you or you've been keeping an eye on anything that you see in the paper or in the news, you are absolutely in the right place to get more information today. So before we get started, a few quick housekeeping points. Please do keep yourself muted unless you're speaking. The chat is very much open throughout, so please use that for any questions and reactions. We'll have a proper question and answer session at the end, so please save your bigger questions for then. We'll be collecting them as we go. And yes, we are recording today. You'll receive a link to the recording and the slides after the session. We're going to kick off with a few ground rules. So we just want today to be as useful as possible. There are genuinely no silly questions. MTD is new for everyone. If you're wondering something, I'd bet that at least 10 other people on this call are wondering the same thing. So this is what we've got lined up for you today. We'll start with our tax expert, Jennifer, who's going to walk us through what MTD actually means for landlords, the rules, the deadlines, who's affected. Then Roy from our product team is going to show you exactly how Landlord Vision handles your MTD submissions end to end on a live demo. Jennifer then will come back with some deeper insights on penalties and common mistakes, really practical stuff. And then we'll close with the questions and answers. So plenty of time for your questions. So let me introduce you to today's speakers. You've got me, Emmeline, as your host. And then joining me is Jennifer Adams. Jennifer is a specialist tax advisor with deep expertise in landlord and property taxation. And we also have Roy from our product team who will be demoing our Landlord Vision MTD feature shortly. So now let's get going. Jennifer, over to you.
Okay, making tax digital. Most important point to make about MTD is that if you come within the criteria, then you have no choice but to comply. There are exemptions, but they are restrictive. HMRC think that MTD will reduce the potential for errors. Fewer errors mean reduced possibility of penalties and make tax payment planning easier for taxpayers. On submission of each quarterly update, you will receive a computation of how much tax HMRC think you have clocked up so far. Digitalization is where data is transferred electronically between software programs, products, or applications. The transfer is automated, the idea being that there's no manual loading, no typing, no copying and pasting between the two pieces of software. There are changes, and the most important ones are we're going to have to submit 4 quarterly updates and then 1 year-end submission, similar to the tax return, end-of-year return that we all know and love currently. Whether you can opt out or not, it's very difficult. Whatever anyone might tell you, it will be difficult. There are exemptions such as trustees, executors, personal representatives, non-residents. What is most important is this system does not apply to partnerships, but be very careful of this. Just because you jointly own a property does not mean you're in a partnership. A partnership is specifically defined in the Partnership Act 1890, and there needs to be some kind of degree of commercial activity and intent to make a profit. You can't just jointly own a property. Companies are also not included, and they're not going to be included at all, however far we go. Once an individual is in the scheme, you have to stay for 3 years, and you only become exempt after 3 consecutive years in MTD when the qualifying income is below the threshold, or obviously if the last property is sold and lettings cease. This slide shows the limits. The imminent one is over 50,000, and that's going to come in the next few days, really, rather than weeks. And be sure that it's the gross amount. And whether you are in the scheme or not depends on the qualifying income, which you can see is the combined income from self-employment and property, all measured before expenses. So it is the gross amount. Many of you would have received letters from HMRC saying and confirming whether you are in the scheme or not. But if you haven't received one, it doesn't mean that you are not in the scheme. If for 24-25 or 25-26 you are over 50,000, then you are in the scheme. What is not included in the calculation is employment income, the PAYE, partnership income, dividends and savings and investment. All that information is going to be thrown on the year-end return. This is just purely self-employment and property income. And this slide goes further on this: sole trader and property business records. Separate quarterly updates are needed for each trade and property business. So if you have a sole trade plus property income, you're looking at 8 quarterly submissions a year, plus 1 end of year return for all the other income, that everything is being pushed together. Where the gross income is below 90,000, which just happens to be the VAT registration limit, but it's nothing to do with the property, it just happens to be, taxpayers can choose to record each item of income and expense with no breakdown. You can just submit 3 lines: income, expenses, profit. If the income is over, that's the gross income, remember, over 90,000, then the normal standard categories apply for the entire year. So the ones that we all have been submitting, which are rent, rates, insurance, management fees, repairs. The exception is the residential finance cost, which is the mortgage, etc. These have to be separately categorized because this is not an expense, it's a tax credit. And here is the default year basis. And if you have a look, the quarterly updates operate cumulatively. By default, the quarters are going to be based on the dates of the tax year. So we're looking at 6th of April, 5th of July, October, January, 5th of April. And the deadline will be the 7th of August as it shows. But you can see that submitting the quarterly update 2 for 6th of April to 5th of October, that will override the 6th of April to the 5th of July. So you submit the first one, and when you come to do the second one, it will add the 2 together. And by the time you get to the update 4, the idea is that all of your income and your expenses from sole trader and or property income should have been declared. You then go on to do the end of year submission. There is an alternative to the normal 5th of July, October, January, and that is compiling the information in under calendar quarters. You have to elect, and these will align the quarterly update periods with calendar months instead of the tax year. This is most likely to be simpler for businesses, particularly those that compile their accounts on a month end rather than matching the tax year. The quarterly updates are, as you can see, 30th September, December, and the 31st of March. Filing deadline doesn't change. And once you're in this system, you are in. Now, this one I would suggest is the most relevant to landlords, because most landlords receive their money for a month in advance at the end or at the beginning of the calendar year. And the most important thing is to remember, if you compare the two, the default and the alternative, you receive an extra 5 days in which to submit. You've done your 4 updates, and now you get to the end of the year and there is a end of year submission. Now that is similar to the current self-assessment return, but the return will bring forward and pre-populate with the income and expenses from the 4 quarterly updates already filed. Here You are adjusting for accounting and tax purposes on this return, that is disallowing private use, including capital expenditure, and include any non-business income sources, bank interest, salaries, pensions, etc. HMRC say that they will pre-populate some of those entries, for example, a P60 if submitted, but sometimes this won't come through, so do watch for this.
Okay, that's brilliant. Now, the big question for today's session is, how do you actually do this in Landlord Vision? And that's what Roy's going to show us now. Over to you, Roy.
Hello, I'm Roy. This is Landlord Vision. I've seen a few questions coming in already, and I hope to try and capture some of those during this session. So we start off with setting the ownerships. So within your portfolio, you have the option to set all the owners of that portfolio. So here I've got Sean and I've got Gail, who own the portfolio on a 70-30 basis. So the report will take those into account. Now, you may have some properties that are owned differently. So you can go into the properties, you can go into the units area. There's a tick box down here where you can set that property owner, and you can say, who the owner is, and what percentages are if they're different. So it might be that there's some properties that are just owned fully by one person. Mark those in, and the system will have those. And again, it will use those when we come to run the report. So we've got our properties. As you're sure you all know, you then have tenancies, which are then assigned to those properties. So you tell the software who's there, what they're paying, and when they're due to pay that. And the system produces what we call invoices. So this is everybody it's all the rents that are due and whether they've been paid or not. And you can mark these as paid on here, take those off, mark them as paid, or you can do them from the bank account, which I'll come on to in a moment. We also have expenses, so you can record all of your outgoings also through the system. And all of your expenses can be categorized for all these different categories, which all relate to different places in your account, in your reports. Some of them, like capital costs, will go to different reports. They won't necessarily appear on your tax return. And then all that comes together in the bank account. So after you record your payments into the bank account, you can, to facilitate that, you can set up what we call a bank feed. I have a whole series of banks that you can choose from. They're all on there. Take your pick. Set up a feed, and those transactions then come in automatically every day from the bank account. So you can just go into here, see, there's all my transactions, there's all my rental invoices, click, 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 record those payments. Let's do that one there. Disappears off your list and records that invoice as paid. So you can then see that everything's up to date, and you can even check then to tenants to see if your tenants are actually up to date, if any. Then all that comes together in the reports area, and we head down to the MTD for income tax report. And as you can see, you have multiple users. So we've got 2 people on here, and I'm now going to add a third person who's over here. So let's do it by national insurance number. So we've got, there it is. Add in them. Takes me to the government gateway. So I want to connect with those, sign into the government gateway. So use the government gateway user ID and password, which is your 12-digit government gateway address. I'm assuming you all have one. If you don't, you'll need to get one. Paste that in, and that goes, sign in. Get rid of that. Give permission so that Landlord Vision can then access that data and transfer it from Landlord Vision to HMRC. That then takes us into the report, and now we see at the top we see our tax years. At the moment it just has the current year, but once we get into 26, 27, that'll appear under here as well. We've got all of our various obligations. So we talked about we have UK property, so for your sole trader. We also have foreign property income. you have that as well. And if you do have self-employment income or other from other companies, you can record those through here as well. So we're talking about how you might have 8, 15, whatever submissions in a year. You can do all of those through Landlord Vision in straight off the screen in one go. So we've got the business details over here. Main things you need to check on are your period type, which has come up as standard because I set my start date in the other part. And I can choose between cash and accruals. And then I can link to a portfolio or more than one portfolio. So you can have some properties in one portfolio, some properties in another portfolio. So depending on how your ownerships are all set up, you can record those in here, save that configuration, and then it pulls out all the information from each of the portfolios that it's connected to. So I've got all of my rental incomes and my other incomes, or the headers that Jennifer was talking about before, financial costs, repairs and maintenance, all that kind of thing, manual allowances, and then got some adjustments at the bottom here. And we can click on these so we can see where those numbers come from. And then we can actually click on them further to see what those expenses are actually made up from. So you see that this is a much higher expense than what has come through because that is affected by the ownerships. So you can see how the ownerships are taking effect there. We scan through those, make sure everything's correct. Once we're happy, we click submit to HMRC, and that data then goes off to HMRC. So it's a one-way transfer. You only send data to HMRC. They can't see into the software from their side. So whatever you've got in the software, they can't see that. It's only once you've pressed send. And we can see that we've just done that submission a few moments ago. And as Jennifer was saying, it overwrites your previous submissions. So if you are one of the people, if you're a kind of person, I should say, who does all of their data at the beginning of the month. So let's say we just had February. At the beginning of March, you went through and did all of your numbers. Then you can come, once you've finished it, you're happy with everything that's done, go onto this page, press submit. So you can do them, not necessarily have to do them every quarter, you can do them every month, every week, every day, however often you want to do that. As part of your process, just put submit to HMRC, and then that just keeps you up to date then. I'm just going to press that again, just to get me through to the end of the year. And now we've got some extra sections at the top here. So we've got some end of year adjustments, which are pending. So we'll click onto those. So again, Jennifer was talking about these before. So you can have adjustments. These are available for you to fill in. For the most part, you shouldn't need to do these. I wouldn't have thought, because the cash basis probably wouldn't need them too much. And for accruals basis, the software apportions between the two accounting periods anyway. But they're here if you do need them, and you can submit those adjustments and proceed to the next step. On the next screen, we can record losses. So you can add losses for your any of your businesses that you're reporting for. So as I was saying, you can do everything all at once. So I'm going to put £70 into here, just as an example. And then you can put in your loss claims as well, various different types of claims. And again, you can assign those to different businesses. So you can put all of those in and keep a record of those. Which then takes us on to the final screen, which is the tax year finalization, where again, you just read through all these and confirm that you have completed everything into the best of your knowledge, and then we press the finalization process, to start completing the year. We click the calculation, takes us to the next screen. We can then see the software pulls all this information out. So this is what HMRC can get back to you. This is just test data, obviously. Yours will look more realistic. And read the details, check all the calculation details, see all your information. Once you're happy, tick I agree with this calculation and submit self-assessment declaration. Put in your password and confirm that. And that's done. And then if you really need to, you can unlock it for amendments, but at that point, everything is complete and locked. You can't change anything unless you absolutely need to. And that's everything for this section.
It's good to see Bob the Builder keeping on top of his MTD submissions there. It was a really helpful walkthrough. I hope everyone else felt the same. If you've got any questions about the feature in Landlord Vision, please do get in touch with us at any time. So before we get to the questions, Jennifer is coming back with some really practical insights, including how the penalty system works and the most common mistakes landlords make and how to prepare.
I was going to say, on with the Landlord Vision, you'll see on that screen it has business details on the right hand side. That is where you choose whether you're going to do your alternative or your default way of submissions. And you'll also see that every time you put on in a quarterly update, the system will calculate or give an estimate of how much tax you're building up, which is where the value of this system comes. My next slide is going on about penalties. I think with penalties, it's rather like the driving penalty points. If you've been once caught, you get 1 point, etc., etc. This one is changing for everything, not just for making tax digital. There's going to be a maximum of 5 points for each year, which will expire after you put in your returns correctly after 24 months, 2 years. But once that maximum of 5 points is reached, you're going to be whacked with a £200 penalty. And if you're late again, you get another immediate £200 penalty. It's important and it's very easy to go over the limit. So I suggest you go onto HMRC's webpage, print out the penalty schedule and put it somewhere where you can see it, and also make a list or a date or set aside some time that you will be able to do this quarterly submission. There will be what they call a soft landing, which means that anyone that is joining now, April 26th, you will not be charged any penalties for a whole year. If you join in 27, that's when you get into the system. So again, it might be an idea, even if you haven't got the 50,000 limit yet, to join this year 26-27, so you can get into the system and get the idea of what's going, make your mistakes, so that when you get to the real time that you're coming in 27, which are for people who are on the £30,000 limit, you'll know exactly what you're going to do. In the next slide, if you make late payments, you will be whacked with a percentage of tax payable. It's the first date of charge. You used to be 30 days. If you hadn't paid by 30 days, you'd then be whacked with a percentage of tax. This time it's 15 days. So times is tightening up like anything. So again, you must get everything in on time. The first year, as I said, the penalty won't apply and you'll have 30 days, and they're trying to get people into the system. The next slide is common landlord mistakes. The problems I find with clients who come to me, there are 2 or 3 different ones. One of them is not knowing how to do what they call the Form 17. the rental profit, if you have a joint owned property, its default is 50-50. So, but if you, sometimes you might have someone that owns a property that is a higher rate taxpayer and sometimes who is a basic rate taxpayer. Now, you can't just sort of put all the income on the basic rate taxpayer. You have to split it, and you have to split it 50%, unless the underlying ownership is different. So you can own a property, you don't have to own it 50-50, you can own it 90-10, 80-20, whichever is more beneficial if someone is a higher rater and someone is a lower rater. That is if you are jointly owned by spouses or civil partners, and you have to fill in this Form 17, and then they will tax you on the underlying rate, not the 50. If you have a property that is, you're not owned with a spouse, probably a sister and brother, and one of them is a higher rater and the other one isn't, sorry, you can decide what percentage you can be taxed on. Sorry. The next problem that I come across quite a lot is people incorrectly deducting or showing on the return full mortgage interest, or claiming more interest than the mortgage statement shows. That information, the mortgage statement of the interest, is going to go to HMRC directly. So you've got to show exactly the same amount of interest on your, and claim that amount on your tax return, and it will be shown on the final year-end tax return.
Thank you, Jennifer. I really appreciate that. Okay, so yes, the question and answer section. We've had some questions in. Bear with me as I read them out. Okay, so first one, Roy, this is for you. How does the software handle properties with multiple owners?
Yeah, so I think I covered that in my section. So you can add owners to your properties, to the portfolio, I should say, and then also to the properties individually, and also if there are any different set ownership percentages for each one, and then that gets carried through to the report.
Lovely. How does the system handle joint ownership split between a trust and an individual?
So the same thing, you would just add the trust as a landlord.
Great stuff. And Jennifer, is there anything that we needed to know from an accounting perspective outside of the software between those two things? Or
yes, with the trusts aren't in Making Tax Digital, and they won't be in Making Tax Digital. So you've got to be very careful. You make it a separate person, as Roy says, but that information is not submitted. So you're only submitting the income and expenses relating to you only, not the trust.
okay. Another one for Jennifer. Is the MTD income threshold based on gross or net rental income?
No, I'm afraid it's gross.
It's gross.
I'm afraid it's gross. And also, if you have you got a sole trader income and you've got a property income, you add the two together, and that makes the 50,000. It's not 50,000 for the property and 50,000 for the sole trader. It's the two together, which I think is going to catch a number of people out.
Okay. Can non-property self-employed income be included alongside rental income?
No, you put that's being put at the end. This is purely your rental income and expenses that are going on the quarterly submissions, and then at the end you'll have your employment, and you'll put that into the end of year submission. Hopefully HMRC will get their act together, and anything that is on your P60 will be automatically gone into or showing on your end of year return.
Great
so
stuff.
You won't have to bother with that, but you must look at it, because I find sometimes it doesn't flow through, but I'm sure these things will work itself out.
Roy, one for you. Does LV replace the need for an accountant to submit returns, or does it work alongside?
Yeah, I get asked this a lot. We always say that in theory, yes, but obviously you may want to get your accountant just to check over everything, just to make sure that everything is fine. But yes, you can submit the data yourself.
Okay. Big question here. When will MTD functionality be available in Landlord Vision?
So as you've seen, we built it. It's there. It's working. It runs fine with that. Once you complete the software, you then get given a huge list of tests to complete by HMRC, which we have now completed, and we are basically waiting on them to say yes, that is perfect. I think they came back to us with one or two queries, which we've now got back to them with. We're happy with there, so we're just waiting for them to say yes, it's all good. So all being well, it could even be this week or next week, but we will still see. But yeah, it should be pretty soon.
Okay. So Jennifer, how do you make the election for the calendar month basis?
Yes, so that was underneath the business details section of the Landlord Vision. If you had a look, it's a small, on the right hand side it said, and you tick the box, and then that will submit the first one to HMRC. That will show them that you're doing on a calendar basis.
Okay, that's great. Does PAYE income from a property management company count towards quarterly submissions?
No.
Okay.
That is, as I said, you're just doing your income and expenses from your rental income only. It's your total rental income. Okay. Doesn't matter how many houses you have, how many renting, if it's HMO, whatever. And then the P60 and anything else, the dividends and your bank interest, all come in the end of year return, just like you did in the old return.
Okay. And in that rental income, does that include the lodger income? Does that count towards
What,
it?
sorry?
Lodger income.
Yes.
Yes.
Unless you are doing well, depends what you mean by lodger income. If you mean the rent a room allowance, no, it doesn't. You don't include that.
Roy, can an accountant access Landlord Vision to submit on a landlord's behalf?
Yes, you can add on additional users. There's at the top right-hand corner, there's your name bar, and you get the option to add additional team members.
Can Roy
your...
explain how the system will handle two different portfolios, one of which is 50-50 between two partners, and the other is one partner solely?
Yeah, I think I covered that. So you can have multiple portfolios, and you set up the ownerships in each portfolio. So you have one portfolio be 50-50, and one portfolio will be 100% just you, or whoever the other person is. And you then assign the national insurance number to the individual contacts in each portfolio.
Okay.
That's how it picks it up.
So another one for you, Roy. Does HMRC have access to data within Landlord Vision, or do they only see the totals you submit?
They only see the totals that you submit. It's a one-way system. We send to HMRC. HMRC cannot see what's in Landlord Vision.
In the sandbox practice mode to prepare quarterly submissions without submitting to HMRC, and can those below the threshold use Landlord Vision to prepare in advance?
I'm not sure about the first one. I'll have to look at that one. Second one, yes. I mean, I believe so. You confirm that, Jennifer? I assume that even if you're below the threshold, you can still use it, even if you wanted to.
Yes, can I interrupt
Yeah.
here? Yes, you can. That's why I said that people who are underneath the 50,000, it's only 50,000 just to get a whole, just to spread it. Otherwise, there'll be loads of people, won't they, just going on to the system. So they're doing 50 first, then 30, and then 20. They're testing it all out because they've got to test their systems. Although they've done beta and testing with everything, they've got to test their systems as well. So if you do want to, I would suggest that you do, because then, as I said to you before, there is this year that is going to be that if you get it all wrong, you don't put it in on time, something happens, it doesn't matter. You won't be having any penalties at all, and it'll allow you to test the system out. So you don't have to be 50,000. You can be 20,000. You could be 10,000 if you wanted to, but I wouldn't really bother with that. It's if you are 30 or 20,000, by all means submit it and use the system.
They've got time for just one more. If you, let's see, can property income be filed from LV and sole trader income from another software? So can you use two for your various entities?
Yes, my apologies, I forgot to cover that. So yes, you actually maybe I did. You can have, or we will have, a sole trader portfolio for self-employment income, and you'll be able to put your data into there, and then yeah, you just match that up to your portfolio, and you'll be able to submit that data too. So as I was, yeah, I did cover this. You'll be able to cover UK property. You'll be able to cover non-UK property. You'll be able to also submit self-employment income, and then for quarterly returns, and then in the final year submission, there'll be all of your what's the word called, investment income, like interest, dividends, all that kind of thing. I think capital gains is covered in there as well, so we'll be able to cover or to submit all of that information also.
Thank you. Okay, so I think we're coming up to time now, so I'll bring us back together. Here are the 5 things that we would like you to take away with you today. MTD is imminent. If your qualifying income is over 50,000, it applies to you from April. Landlord Vision is built to handle this for you, as Roy showed us today in the live demo. Quarterly submissions don't mean quarterly tax payments. Your payment dates don't change. Talk to your accountant now, not later. MTD means more touch points, so get that workflow agreed early and start preparing today. Register with HMRC, get your records set up in Landlord Vision, and diarise your quarter dates. Thank you to Jenna for joining us at short notice, and Roy, thank you very much for taking us through the software. Thank you to everyone. I hope you have a lovely evening, and if we've got any more information, we will definitely be holding another one of these in the not too distant future. Thanks very much.